Hi, a very good morning and welcome to BNSN The Stock Game on ET Now. I'm Megha Chadha.
Hi Megha and hi to all of our viewers. Welcome to BNSN The Stock Game. We've got 3 experts who are playing with us this week. But as always, first and foremost, it's important that we tell you what BNSN The Stock Game is all about in case it's the first time you're watching. We get 3 experts. They join us from Monday all the way up until Friday and we give them a notional amount of 5 lakh rupees. We make them build a portfolio with this 5 lakh rupees and choose a total of 4 stocks, and they're only allowed to choose 1 stock from the F&O space. There's a compulsory churn of 2 stocks every single day, and if there's a sell call in the cash market, that too must be replicated with a new stock. In addition to that, if a target price has been achieved or a stop loss has been triggered, which in a volatile market like this tends to happen quite a bit, then they must replace that stock with a new one for the next day. So let's bring on board our 3 experts and see who by Friday will make the maximum amount of money on their 5 lakh rupees. We've got with us Pankaj Jain, Director at Suntech WealthMax joining in. There's Shrikant Shetty, Head Equity Advisory at Unicorn Investment Solutions. And finally, Uday Narayan Dubey, Vice President in Research and Institution Desk at RK Global. Gentlemen, as always, it's a pleasure to have you with us on BNSN The Stock Game. Before we take you through what the picks are today, let Megha give us a glimpse as to what happened on Truncated Tuesday.
Well, as you just spoke about it being a very choppy session yesterday, we had Pankaj who had quite a few short calls in his portfolio yesterday who made the most amount of money. But let's run you through the individual portfolios then. We've got Uday Narayan Dubey's portfolio first. He got stopped out on an Indraprasth gas. Besides that, a central bank also didn't work out too well for him, and by the day's end, he was losing out over 4,000 rupees. Shrikant's portfolio then, he was stopped out as well on 2 long calls that he had on a Century Textile as well as an Arvind Mills. But he was in the second position and was making close to 11,000 rupees. Pankaj, our third expert, was in the lead by yesterday's trading close, and he had 3 short calls and 1 long on a TCS. In fact, all the 3 short calls worked out very well for him, hitting the targets that he'd set out for them for the day, and he was in the lead, making close to 13,300 rupees. But with that, let's go to our experts today and ask them what their picks are for today's session. Uday, I begin with you. Run us through your picks for the day. You've got an evenly divided portfolio between 2 buys and 2 sell calls.
Yeah, morning.
Morning.
Market is looking a bit nervous here. I think that's why I have chosen 2 long and 2 short call for the day. And the first long call for the day is Mahindra & Mahindra. I am keeping a target of 721 and another target in ACC around 1192. I have a 2 short call for the days. One is ICICI Bank having a target of 706 and BPCL having a target of 490.
Okay, that's Uday Narayan's portfolio, playing it safe, and as he mentioned, he's getting a bit nervous with these kind of markets. Shrikant, are you too getting a little bit nervous?
Yeah, it does look a bit nervous because the volumes are also very dry in the market, and so the volatility is clearly higher within a narrow range. In terms of stocks, I picked 3 buys and 1 sell. In the buys, picked up HCL Tech in the technology space, Apollo Tyres in the auto space, and Kane India. On the short side, I have Bank of India in the PSU banking space.
Okay, so 3 buy calls, 1 short coming in on a Bank of India. But Pankaj, it looks like that you're clearly confident that the markets are going to remain weak for today. You've got 4 sell calls across the board.
Yeah, morning. Actually, we didn't have any strong cues from the market in morning today in either direction, either international cues or domestic cues. So basically, we tried to get the sense of direction. I think that is what is more important. If you are playing for the day, you got to get the direction right. And with the kind of halla gulla noise we had in Parliament yesterday, I think I had made a statement generally like all this noise in the Parliament adds to the misery of the market. I think that is what we are playing in for today also. And I think any levels below 47651 on Nifty, I think I'll continue to remain short. So that was the reason. So we've gone short on Nifty, we've gone short on Raymond, we have gone short on Fortis, we have gone short on SKS Microfinance. Basically, we have tried to identify pockets of underperformance in this already bearish market.
Okay, trying to identify the trend of the market, and Pankaj believes that it's going to be quite bearish, which is why he's got sell calls across the board on day 3. So how is this working in his favor, and is it or not? Let's pull up the calculator plates. That'll only give us a better indication of who is making money and who isn't. We'll start off then with Uday Narayan Dubey. One target price achieved on an ICICI bank. BPCL also giving him gains, but from day one, it's a tempered move, losing 0.5%, that's 2,000 rupees shaved off. Shrikant Shetty continues to maintain gains, but today is not the best of days given that only Bank of India is working in his favor. Stopped out on KN and HCL Tech. That would mean that's 1.7 rupees, 1.7%, 9,000 rupees is what he stands to gain. And finally on to Pankaj Jain, who is seeing solid gains across the board. He seems to have identified the trend in the correct way. It's a 4.6% gain. The target price today has been achieved on all stocks, so he's locked out with a smart gain of 23,000 rupees. So as things stand, it's Pankaj Jain, Shrikant Shetty and Uday Narayan Dubey. We'll just have to wait and see if the tables turn on day 5. But time now to give you better stock-specific ideas. We'll chat about their individual picks in greater detail. It's an M&M first up. You've got a buy call on that. You have the NPAs, which are fairly restricted for this company. It is expecting a strong growth of 10 to 12% over there, as well as the kind of tractor demand. There has been no slow growth over there. So everything looking very buoyant for this company.
Yeah, that's why we have chosen M&M. M&M is the market leader in tractor segment, and the low-cost tractor, that is Yuvraj, is doing quite well for the stock. I think company is going to post quite robust volume growth in coming years also in FIO 13 and FIO 12 also full year. I think that's why company is in growth trend and doing well. Even the SUV 500 is doing well for the company. We have a positive outlook on the stock and for the company for the coming year also. But for trading, the stock is continuously maintaining 690 on a 2 or 3 days, since 2 or 3 days. That's why we have a buy call on a technical. Even the leading indicator are indicating that the company or stock might gain some momentum, but still it's because of choppy market, the stock is not doing well, and but I hope stock will do well in coming days and may reach 721.
Okay, so hoping that the technical factors work in his favor. That's the word on an M&M, a target of 721, but dangerously close to the stop loss level. Shrikant, I'll come to your first pick for the day from the IT pack. It's an HCL Tech that you've gone long on. You know, fundamentally the company has been doing quite well. They've got quite a few orders. The most recent one being that the deal with AstraZeneca, where they're going to be managing their data centers across 60 locations. This is expected to be a very big boost for the counter, and they're also talking about how Europe is going to be the new focus area for them. But on the charts, it's a bit weak today. But do you think that a 402 can't be ruled out?
Yeah, on the charts, it has turned weak now with also my stop loss got triggered. But from a fundamental perspective, we have fairly bullish on HCL Tech. Also, it's among the few sectors, if you look around, where we're expecting some positive numbers to come through even in the current quarter. And HCL Tech on a relative basis is better valued compared to Infosys, HCL Tech, Infosys, TCS and likes. So on a relative valuation base also is fairly attractive from a medium-term perspective. So that's where we are, from a medium-term perspective, we are positive on HCL Tech. From a trading side, yeah, I think 405, 410 is typically a resistance area for HCL Tech. So that kind of targets is definitely achievable.
Okay, on a relative basis, HCL Tech is the outperformer when compared to its peers. Pankaj, let's take it to you. You're shorting the Nifty this time around. You've got a target on the Nifty futures of 4732. We breached that level and now threatening to break 4700 on the downside. What's your sense going into 2012? Do you believe that the worst case scenario could perhaps be even levels of 4300 before things stabilize? I'm talking long term here.
Could be. I think if we try to talk rationally, fundamentally, I think the problem areas basically FIs. I think there is no reason for FIs to immediately come back to our market. I think domestic problems still pertain, may it be politically, may it be economically. I think the kind of fiscal deficit. I think there was a statement from Ministry of Finance yesterday that 4.6% fiscal deficit will be very difficult to maintain. And I think the kind of borrowing programs they've said they've done unscheduled borrowing of 15,000 crore rupees for Friday, I think, and they've said before budget they'll be going in for some more borrowing. So I think that everything is adding to the gloom. So so we think, and Q3 results will be much more challenging than Q2 results, and the way rupee dollar scenario has moved in last 30-45 days, I think these are all problem areas. They will sort of these areas, these problem areas will continue to multiply. Only silver lining could be if we have some serious interest rate cut in next 3-4 months, but that will take time. That will not happen immediately. So we are bearish on the market. Any levels beyond 4800 or any levels between 48 and 49, I think these are levels to go short on short-term basis. So that is the criteria we've gone short on. So if Nifty closes below 4715, I think these are areas of concern. We could see Nifty moving towards 4620 on immediate term basis. But I'll cut my short positions only if Nifty closes above 4765.
Okay, so those were some of the critical levels that Pankaj has just pointed out. 4715 on the downside. If we break below that on a closing basis, 4620 is where we could be heading towards. But besides that, the short call today, of course, is working out very well for him. So the Nifty lower by about almost 0.8%, close to the day's lows. Uday, from your next pick for the day, it's coming from the cement pack and ACC. Again, you're quite bullish on this count. As far as the chart patterns for cement counters also go, we've seen quite a rally and the cement names have really held out. The likes of an Ambuja, an ACC, and Ultratech, they've all held out in the recent volatility as well. Do you think going ahead, it's possibly a good time to make a fundamental investment into these names?
The main rationale behind picking up ACC is in choppy session or in uncertain session, I think it's better to pick some strength. Cement, FMCG and ITs. These are the three sectors that those have gently held the stock or maybe index for the full year. I think cement have outperformed the full year and likely to do the same. Chart pattern in ACC, Ambuja is going to hit the new high. So indicating that there is a positive momentum, and over the chart I think it's a clear uptrend and they are likely to be in uptrend. There is no possibility of reversal. It's a pure technical pick, and that's why we have chosen ACC. And the news is also supporting the post monsoon. We have seen good demand for the cement. Even the 6 core numbers are reflecting there is a huge demand from the cement and all. I think overall news, sentiment and chart pattern both are supporting our argument for the cement. Over the longer period we have a cautious view on the cement. I think the slower real estate demand is likely to dampen the sentiment overall in the coming year, but right now I think it's better to hold this stock for the full year, and maybe the stock is in uptrend, it's better to buy the trend and trade as per the trend.
This is a stock that you want to keep in your portfolio for the long term. That's the advice coming in from Uday, and he believes that cement as a pack has a lot of upside potential going into the next year. Very tepid for that counter, 1173. Add to that list, and Apollo Tyres very quiet in today's session, lower by just about 0.3%. That's the next pick which is coming in, a buy call from Shrikant Shetty with a target at 65 rupees. Shrikant, if one were to enter this counter, what level would you advise? Because it has been fairly resilient on the charts.
It has been fairly resilient, and that's where it came into the pick as well, given the overall relative strength which it has shown vis-a-vis the market. Even today it's holding out, so on a stop loss of about 59 is what we have kept for the day, and the target price about 63 to 65 is achievable from a short-term perspective. From a medium-term perspective also the stock looks positive given the kind of numbers it has thrown up even in the last quarter, where valuation-wise the stock is fairly attractive. Even if one looks at a longer-term kind of perspective, the replacement market demand will open up quite significantly, and Apollo Tyres should be one of the beneficiaries here. So most of the negatives have already got played out, be it in terms of rubber prices, higher rubber prices. The markets have been discounting that, or poor auto demand. So any revival in some of these segments should see bigger upsides for Apollo Tyres.
Okay, so that's a word on an Apollo Tyres. A 0.25% loss today, and 8% has been shaved off for the month of December alone. But Shrikant's talking about a target of 65, but dangerously close to that stop loss of 59 odd. Talk about a Raymond then from the textile pack, which is what Pankaj has gone short on for the day. Pankaj, you know, if you just look at the charts for this name, for the month of December alone, we've lost 19%. And look at the highs that we've clocked for the month. 420 is the sort of level that we saw, and 315 is where we're sitting at right now. So much, I mean, we've seen an absolute breakdown as far as the charts are concerned. Where do you think that this selling really stem for a Raymond?
Yeah, I think Raymond is more of a techno techno momentum call, I would say, and the kind of fall we have seen from levels closer to 400 to levels closer to say 300 now, and this has happened at post FDI multi-brand retail fiasco. I think after that we have seen all these stocks, Pantaloons, Shoppers Stop, Raymond, CSC, they all falling down. And Raymond, mind you, Raymond while coming down, it has reached some serious levels of 346, 333, 324. I think these were pretty serious supporting levels. They've been breached, and I think next serious support I can see somewhere around 280 or 280 to 285 kind of pocket. So that was the reason we went short on Raymond. We continue to be bearish on Raymond, and I think as I said, I think next levels, supporting levels could be somewhere around 285.
Okay, so the target price has been achieved today of 318, and Pankaj saying that it can even touch levels as low as 280 in the long term. You saw 20% shaved off in a matter of just 1 month on this counter. Once again then, let's give you a glimpse of the calculator plates of each of our experts. It's 50-50 for Uday Narayan Dupe, but given that these gains are calculated from the first day, he's losing out 0.5%, that's 2,780 rupees off. On to Shrikant Shetty then, he's tempered his gains from yesterday given that 3 stocks are not working in his favour. So for the total portfolio, it's a gain of 1.8%. He's making 9,080 rupees. And on to Pankaj Jain, the target price has been achieved for all of his stocks, which means that the portfolio is locked in for day 3 with a gain of 4.6%. 23,000 rupees is what he stands to gain at this point in time. We'll take a quick break then, right here on BNSN, the stock game, 6 new stock ideas on the other side.
Absolutely, and not just that, you can also send in any queries that you may have to bnsn@etnow.tv. You could also message us your query at 58888. You could also call us and join in live on the show on 022-24837-111. Not just that, you can also get your portfolio analyzed by our experts every Monday, Wednesday and Friday. So write into us at bnsn@etnow.tv with your portfolio, and we'll have the experts advise you on the same. Back with BNSN, the stock game, and we're playing the game with Uday, Pankaj as well as Shrikant. So time now to get you their picks number 3 and 4. Uday, a short call coming in on an ICICI Bank. Today of course it's off by about 2.5%. But in recent times we've seen a whole host of banking names undertake that rate hike on NRE deposits. And it's expected that ICICI Bank is also going to follow suit soon. How do you see this scenario really playing out?
Yeah, it will be temporary. I think major banks are suffering because of PSU banks are suffering because of non-performing assets, and the credit growth is also slowing out. So I think it's a risk, and economy is slowing out. So bank may be used to avoid. Right now, I think only one pick that we have in our model portfolio is HDFC Bank, which is doing well and already has raised NRI deposit in just few days back. So the pick that we are choosing is HDFC Bank for the longer term and maybe for the trading perspective also. The ICICI Bank that I have given a short call having a target of 706. The rationale behind is the stock, if we remember, this stock has recently moved quite sharply just few days back, 8%, and made a high of 740. And in the last 3 trading sessions, this stock made a high around 737 and it's unable to break its high also. So keeping that in mind, I think this stock was trading in a narrow range, and one trend that we have seen in just few days, like one day Axis correct and then followed by the ICICI, or ICICI correct and then followed by Axis. So last day Axis corrected nearly 3.5%, and now ICICI Bank followed the same and corrected 706. So that's why we have a sell call on ICICI Bank.
Close to the lowest point of the day for that counter, and it's not isolated in its move. The Bank Nifty is grinding under pressure, as are a lot of the mid-cap names. And Shrikant, you've got a sell on a Bank of India very close to its 52-week low. You think it can perhaps make a fresh low in 3 months' time?
Yeah, it does look like it will most likely make a low given the kind of negative sentiment surrounding the banking system. And Bank of India also suffers from higher NPAs, and there's potential of further more restructuring of assets out here. So there is a risk of downside clearly there, and these are some of the banks which carry higher risk, be it names like Bank of India, Union Bank. These have seen significant deterioration in asset quality as well, and recent numbers have not been up the mark. So there will be difficulty going ahead for some of these banks. And given the overall sentiment playing around in the PSU banks, there is a fairly strong possibility that some of these will make new 52-week lows.
Okay, so financials clearly under pressure. First an ICICI Bank, then a Bank of India. Next, let's talk about an SKS Microfinance then. Pankaj, your short call on that has already hit the target, but given the pressure that's been building up on this name particularly, do you think that that 52-week low of 89 odd could possibly be retested and we might go lower still?
We can, I think. I think yesterday we could identify renewed weakness in financial stocks. And SKS, like when the story started, say 1.5 years back, I think it was too good to be true. Net interest margins of closer to 10%. I think story was too good to be true. And thereafter we have seen the kind of problems company has faced, the kind of problems company is facing in Andhra Pradesh down south. And then the political class and RBI, they seem to be they seem to be in no hurry to sort out the mess. And yesterday we had another negative news that investment arm of Shri Narayan Murthy, which is carrying more than 1% of shares, they are looking to exit the company. So that means stronger players are also almost throwing in the towel. So that was the reason, rationale behind me going short on SKS. And you said 89 rupees, the recent 52-week low, I think those lows can be tested again. If I have to stay with financials, I think it's better to go with pure financial stock, pure banking stock, rather than with stock like SKS Microfinance, where the things look pretty hazy as of now.
In fact, from the word go, and SKS Microfinance from the listing has been quite an underperformer, so no surprises that Pankaj is giving a sell call on that counter. To the last pick then, and a BPCL emerges as a sell call there in your portfolio. They're sitting on massively high under recoveries with the way crude oil prices are faring. Which do you think would be the weakest link from the three biggies in the OMC space?
Yeah. Crude is the biggest risk to the country as overall. I think crude is not going to fall. Even the slowdown, we are talking about the slowdown in Europe and slowdown in US. The crude is still trading around $100 per barrel, which is the biggest risk to India overall. I think under recoveries till there, as per the media report, even the company is talking about, they had already incurred 32,000 crore of under recoveries on selling petroleum product prices around, and maybe as per the prices they are incurring at 28 rupees on a kerosene and diesel and 285 to 86 on cylinder. So that's the under recovery. If crude stays above, I think that's the biggest risk. And now once again the geopolitical risk is arising in somewhere Iran and Iraq, that's supporting the crude prices to move higher. Last day we have seen a rally in crude, and I expect rally in crude to be continued in coming 1 or 2 days. Even the other factor is also hurting the OMCs, the currency depreciation. One hand we have a higher crude prices, another hand our currencies keep depreciating. I think both the factors are going to play out in OMCs. OMCs are, it's very difficult to survive. I think that the subsidy burden of India government is going to go, a balance sheet of India's government going to disturb if crude is still above $100. And maybe after the slowdown in Europe and US, we are not getting any signal whether crude is going to cool off on. So that's the biggest risk to the companies and overall for the economy. That's why we have a sell call on BPCL. I expect price target 490. Although and maybe below that stock can slip further and may reach 465, 470. I'm not positive on the OMCs overall. I think crude is still above 100. It's very difficult to comment.
Okay, so 465 possibly is what we might see for a BPCL. But Srikanth, you're going to be talking about a KN India next.
Yeah, probably for similar reasons that overall the crude outlook, oil outlook is definitely positive, and given even the output front, KN should be able to deliver much higher output going ahead. So on valuations front also there is scope for significant upsides in KN India from a medium term perspective. I picked more from trading perspective, so the stop losses got triggered in today's trade. But the medium term outlook is definitely positive given the kind of outlook which we have on crude and the potential increase in output expected both from the existing ones in India as well as in Sri Lanka. So I think the outlook is fairly positive for KN India.
Outlook is positive for KN India, but not the same for a Fortis Healthcare, on which you've got a sell, made its 52-week low today, Pankaj.
Yeah, I think Fortis, what we have seen in last 45 days or last 50 days, we have seen waterfall kind of fall in this stock, and reasons basically the latest reason has been their $690 million international acquisition. I think there have been serious corporate governance issues regarding those deals, and post that deal I think the market has not taken it well, and we've seen the stock crashing down, and I think it can go down further. Rather, before that also, Fortis, they've been going in for this inorganic growth, and they've been buying companies left, right and center. I think that that is generally, I don't know, market is not taking that in a very positive sense kind of thing. Though this healthcare segment is doing well, my pick in this segment would be Apollo Hospital. Fortis, it's been falling down, and I expect it that this stock could come down to levels closer to say somewhere between 70-75 in weeks to come.
Okay, so 70 or 75 might be tested for a Fortis, but time now to address some information that was coming in on a Punj Lloyd just a few moments ago. We've got some bit of reaction as far as the stock's also concerned. It's recovered quite smartly from the day's lows, but it's still low by about 1% We have news coming in that Punj Lloyd has got a highway project from GMR Projects worth 1,050 crore rupees. It is a 124-kilometer 6-lane project in Chittorgarh in Udaipur. Chittorgarh to Udaipur rather, that they would be executing. So they're going to be doing the EPC part of the project. So it is a project that is with GMR Projects, but they will be doing the engineering as well as the construction part of this particular project. So that's that news, of course, providing quite a bit of sentiment boost to the counter. It has recovered quite smartly from the day's lows of about 39.75 and just about holding above that 40 mark. 41 rupees is almost where it's placed. So just about 1% lower right now. But time now then to quickly one last time on the show take you through the calculator plates. We've got Uday, who's unfortunately been stopped out on a Mahindra and a Mahindra. ICICI Bank, BPCL working in his favor, but he's losing close to 0.7%. That's about 3,800 rupees. Shrikant, on the other hand, has been stopped out on an HCL Tech as well as a Care in India. Bank of India is providing some relief though, but his portfolio continuing to remain in the green. Pankaj, all the targets for today have been met and the portfolio has been locked out with gains of close to 5%. 23,000 rupees is what Pankaj is making right now. With that, gentlemen, thanks very much for joining us today on the show, and of course we look forward to having you back with us tomorrow morning at 11 a.m. with your fresh picks for day 4.
Okay, with that, before we take a quick break, let's get you then some